Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Canadian grain exporters are boosting sales in a slumping global economy, as demand for commodities like oil weakens and frees up railway space. Brisk crop movement in a country that relies heavily on rail is a bright spot during pandemic lockdowns, which have hammered most industries. Canada exported a record 959,900 tons of wheat in the week ended May 10, although year-to-date volumes from August 1 are behind. Canola exports are 8% ahead of the year-ago pace.
Moving on to top news in the energy market.
OPEC forecast on Wednesday a gradual recovery in global demand for oil, which has been hammered by the coronavirus crisis, and said record supply cuts by producers were already helping to rebalance the market. In a monthly report, the Organization of the Petroleum Exporting Countries said demand would decline by 6.4 million barrels per day, BPD, in the second half of 2020, less than the drop of 11.9 million BPD in the first 6 months of the year. Oil prices collapsed as government lockdowns to limit the spread of the virus curtailed travel and economic activity. While some places in Europe and Asia have eased restrictions, concern over new virus outbreaks have kept a lid on prices. To tackle the drop in demand, OPEC and its allies agreed to a record supply cut that started on May 1, while the United States and other nations said they would pump less.
Venezuela's oil exports have fallen nearly 28% in the first half of June, on course for the lowest level in over 70 years as tanker owners and operators suspend contracts for transporting crude oil, according to documents and data on Tuesday. Shipping firms are avoiding Venezuela after the United States earlier this month blacklisted 4 vessels and their owners for transporting the country's crude. Several shippers have turned tankers away from Venezuela's waters in the face of increasingly aggressive U.S. efforts to isolate and oust Socialist President Nicolas Maduro by throttling the oil revenue that funds his government.
Now on to agricultural price news.
Chicago wheat futures edged lower on Wednesday, reaching an 8-month low as the U.S. harvest continues and rainfall across Europe allayed recent weather worries. Corn prices traded both sides of unchanged, as pressure from favorable weather across the U.S. Midwest offset a positive ethanol report, while soybeans were bolstered by talks of warming trade with China. The most active wheat contract on the Chicago Board of Trade WV1 was down 6.75 cents to $4.89 -1/4 a bushel by 11:18 a.m. Central Daylight Saving Time 16:18 GMT, after touching $4.87 -1/4, the contract's lowest level since October 8, 2019. CBOT soybeans SV1 added 3.25 cents to $8.70 -1/4 a bushel, while corn CV1 was up 1/2 cent to $3.29 -1/2 a bushel.
Raw sugar futures on ice fell on Wednesday, giving up some ground after a recent run-up, while London cocoa prices fell to their lowest in more than 1 year. July raw sugar SBC1 was down 0.15 cents, or 1.2%, to 12.04 cents per pound at 13:44 GMT, as the market retreated after failing to breach resistance on Tuesday around a 3-month high of 12.27 cents set earlier this month. September London cocoa LCCC2 fell £26, or 1.5%, to £1,677 per tonne, after dipping to a low of £1,669, the weakest since May 2019. September Arabica coffee KCC2 rose 0.35 cents, or 0.4%, to 95.95 cents per pound, edging away from a 9-month low of 94.55 cents set on Monday.
We will now look into energy price news.
U.S. crude stocks rose unexpectedly last week, while gasoline and distillate inventories fell, the Energy Information Administration said on Wednesday. Crude inventories USOILC=ECI rose by 1.2 million barrels in the week to June 12 to 539.3 million barrels, compared with expectations in a Reuters poll for a 152,000-barrel drop. That put crude stocks at another record, even though imports tailed off and there was another drawdown at the Cushing, Oklahoma delivery hub. Crude futures were lower, with U.S. crude CLC1 down 41 cents, or 1%, to $37.97, while Brent dropped 32 cents to $40.65 a barrel as of 14:47 GMT.
U.S. natural gas futures held near a two-month low on Wednesday on signs of a slow recovery in output and continued low liquefied natural gas exports. Front-month gas futures NGC1 remained unchanged at $1.614 per million British thermal units, at 12:48 GMT. Refinitiv said production in the lower 48 U.S. states averaged just 87.6 billion cubic feet per day, BCFD, in June, down from a 16-month low of 88.2 BCFD in May, and an all-time monthly high of 95.4 BCFD in November. On a daily basis, however, output was up to one-month high of 88.3 BCFD this week from a 19-month low of 85.7 BCFD in late May. With warmer weather coming, Refinitiv forecast U.S. demand, including exports, would rise from 77.9 BCFD this week to 85.1 BCFD next week. That was similar to Refinitiv's outlooks on Monday and Tuesday.
Next, we have updates on metal price moves.
Copper prices rose on Wednesday as risk appetite gained the upper hand in financial markets after promising trials of a COVID-19 treatment and strong U.S. economic data. The World Health Organization moved to update guidelines regarding a cheap, common steroid that can help to save critically ill patients, while data showed that U.S. retail sales increased in May by the most on record. 3-month copper on the London Metal Exchange (LME) CMCU3 gained 0.6% to $5,763 in official trading. LME copper touched a 4-1/2 month high last week after rebounding about 30% from March lows.
Chinese rebar futures slipped for a second straight session on Wednesday as investors worried about surplus risks, with steel output in the world's top metals consumer maintaining a robust pace of growth despite signs of weakening domestic demand. The construction steel products most traded October contract on the Shanghai Futures Exchange SRBCV1 edged down 0.2% to 3,585 yuan $505.78 a ton. The benchmark has so far gained 10% in the second quarter, on track for its best quarterly performance in 4, lifted by solid demand from an infrastructure-led recovery program for the coronavirus-hit Chinese economy.
Finally, we have the recent news on the USD Index.
The US dollar rose from early lows on Wednesday as investors wary of wider geopolitical risks sought its relative safe haven ahead of midday remarks by Federal Reserve Chair Jerome Powell. Sentiment was driven by record-high coronavirus infections in 6 U.S. states, new cases of the disease in Beijing, and clashes between Indian and Chinese troops in the western Himalayas. The dollar edged 0.27% higher to 97.25 against a basket of currencies equals United States dollars, lifting it nearly 0.5% from the day's lows. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more daily updates.